Welcome, everyone, to the Australian Bitcoin podcast. In this episode, you're listening to myself, Justin, and Daniel from Hardblock. And today, we'll be discussing recent global and local Bitcoin news. But before we start, a quick word from our sponsor. The Australian Bitcoin podcast is brought to you by hardblock.com.au. Hardblock is Australia's oldest Bitcoin-only exchange. They have no added fees and are optimized for dollar cost averaging. Sign up to Hardblock today using the discount link in the description below to receive free auto-send batch Bitcoin withdrawals for 6 months. All right, Daniel, how's it going?
Yeah, pretty good. It's very cold here in Adelaide. Very
foggy as
well.
Very
foggy. It feels like it feels like we're in UK or something.
I know.
Middle of winter. But
it's very eerie rolling into the city today, and you can only see like 10 meters in front of you. The rest of it is just very misty, something from a movie.
Yeah.
Anything new going on?
Yeah. Well, I mentioned this to you before, but I had my bike stolen like last week, which was I was kind of shocked, and I wonder if it relates to Bitcoin. My wife actually thinks it does because she reckons like there's going to be more, more like with people having more economic hardship.
Yeah,
maybe
absolutely.
Like petty crime will go up. And I had my bike stolen in Adelaide in the middle of the day.
Right out of the front of the office.
Yeah, right in front of it. It's basically like 30 seconds from where I'm working. I could almost see it from when I'm sitting. So I was very shocked that in the middle of the day in Adelaide, which is a very safe place, they stole my bike. So I'm still kind of reeling from that. Yeah. And apart from that, the other thing I wanted to mention is, last week we had the Australian Bitcoin industry body had its first general meeting, which was interesting. So for voice of
what came out of that?
So for voice of you who don't know, people were in the Bitcoin community at the Bitcoin Bush Bashes were talking about starting a Bitcoin-only industry body because there's Blockchain Australia, but there's a lot of questionable people who were involved in Blockchain Australia. We're doing some questionable
I can tell
projects.
Just by the name Blockchain Australia,
yeah. And I remember I went to once a blockchain and we've done a conference, and in that conference over 2 days, like basically I think I heard the word Bitcoin like 3 or 4 times. But anyway, so the Australian Bitcoin industry body was started by Ethan from Bitteroo, and so we had the first general meeting, and it was just a summary of what it was doing. It was kind of very early, so really just what came out of it was we talked about the financials, which it doesn't have. It's still very low. Like a lot of people didn't have to pay in the first year, and what it's been doing. I think Ethan wants to get the community voices involved a bit more. There's also a board election coming up. And also, there's also an issue because Ethan, he does a pretty good job, but he moved to UK recently, which is kind of not ideal for the CEO.
To be on the Australian Bitcoin industry body.
Yeah. And I think it's like, so I think if he's going to stay the long term, I don't know how that would work out.
Yeah. Is there a rotating roster for the CEO? Is it like a 3-year stint or a 1 or 2 year or something like that?
For the board members, there is.
Yeah.
It's 3 years and there's 3 board members. So I'm a board member. I'll be going up, there'll be a election for my board seat. For the CEO, it's not, I think Ethan's keen to find somebody else, but it would have to be somebody appropriate.
Yeah.
But I certainly don't want to get involved because it's, for me, being the CEO, it's kind of a lot of work.
True.
And I personally don't have the time. But I think at some point, like if Ethan does stay overseas long term,
there'll need to be some sort of election process.
I think
or something.
I'm not sure. I think at some point, but the CEO should probably be in Australia.
Yeah, makes sense. You mentioned that Ethan or the board generally was keen to get like more. You say like
the community.
Yeah.
So there's the community. He wants to get the kind of community voices a bit more involved.
Is there anything people can do with that? Is it just
to be honest, that's
social
actually
media,
that's what he mentioned. So I'm not quite sure what he meant by that. So yeah, like
Yeah.
yeah, that's actually what I asked him. Like, what exactly does that mean? But I'm not sure.
That's it. Oh, I guess if anyone has never even seen it, I'm not sure what their Twitter handle is, but I'll link it in the show notes because if anyone's keen to like follow them and just engage a bit more or something, that could be a way. And yeah, they've got a website. You can sign up as a member. But yeah, until then, I guess wait to hear a bit more.
Yeah.
All right, we'll jump into the news because we've got a lot of. As the world becomes more catastrophic, we seem to have a lot more news. So we'll jump into it. We've got 4 different news headlines here that are all about inflation. So I'm going to cluster them together. So we've got the United Kingdom's annual inflation rate as of May is 9.1%. Spain's annual, I say inflation rate, but I mean CPI. So just if I accidentally say inflation, just hear CPI. So the Spain annual CPI as of June is 10.2%. The Eurozone annual CPI as of June is 8.6%, and Turkey's CPI annually as of June is 78.6%. Huge numbers. I remember when we started this podcast, we had CPI stats in there maybe once every 2 podcasts or something along those lines, and it was one CPI stat because there'd be one that was really standout. Now it seems like every week there's a standout statistic of CPI. I don't think that's going away. It's just sort of a sign of the times and a sign of soft money, I guess, or easy money.
Yeah. I mean, it's like each time we do the news, the numbers get a little bit higher. And
definitely.
I think it's one of those things, you know, how the cycle is like slowly and then, you know, how
suddenly, gradually, then suddenly. That's suddenly, we're in the suddenly part for inflation. That's for sure.
Well, I think just changing away from the gradually to suddenly. But that's kind of how you start getting hyperinflation. If the inflation keeps creeping up, and eventually, you know, people think, okay, the prices are just rising, but like at some point, people just will like, there's no point me keeping money. I just have to get rid of any money I have.
Absolutely.
And they just like run away from holding any cash as fast as they can, and there's basically you get a bank run on the currency, and that's when you start getting hyperinflation.
That's it.
So if these numbers keep on creeping up, if they don't if you don't come under control, I think you could have a hyperinflation situation, maybe. And it seems that the central banks, they're doing something, but it really does seem to be too little, too late. They're not really like they increased the interest rates like they need to. I would think they probably need to increase to like 15%, you know, to 20%, but they don't want to do that.
That's
but
right.
I think that's kind of what you need to do to actually get this under control.
Yeah, like Turkey, 78.6%. How much do you increase interest rates to try to curb that? Can anyone actually survive with interest rates? Even some of these other ones like UK 9.1, Spain 10.2. It's like if interest rates went up to 10%. Or even close to that. Like we've got so much debt. The world has more debt now than ever before, really, and governments as well. It's just, too little, too late, and I think it creates a problem in and of itself, doesn't it? Look, Bitcoin fixes this. I think is the obvious solution.
Yeah, well, I mean that's when you start getting this like run on the currency, people just go to whatever else they can store their value in, and one of the best options now is Bitcoin.
That's it.
I mean, I was reading the book When Money Dies. It's a pretty interesting book about inflation in Weimar Germany, and it talked like when initially people were holding the marks and they just thought, you know, if the prices are going up, but when it started becoming higher and higher, the inflation, and kind of went into a hyperinflation situation, they were just holding onto anything.
That was like actually a good. That
exactly. Like even like furniture and things like that. You know, anything but just holding, except holding onto cash. And at that point, unfortunately, they didn't have that much options of what to hold. But now people do have a great option, which is Bitcoin.
Yeah, it's crazy, isn't it? You hear stories of people, you know, burning money to stay warm, but fiat currencies, there's been many points in history where it gets so devalued that is the utility that it has, is to keep you warm. Yeah, crazy times. And I guess in related news, so Sri Lanka has declared bankruptcy. A little while ago, so maybe 2 months or so ago, they declared bankruptcy for foreign debt. So more or less said, we have no longer any foreign reserves, so we're not paying foreign debt anymore. they've now essentially done this domestically as well, to say that they cannot buy and supply food and fuel. The currency has essentially run out. So the Sri Lankan Prime Minister, I understand, has resigned, but it's happening in like a day or two, and he's already left the country. And so now the other political parties are going to form some sort of, a temporary government to try to sort this out. But there's a lot of political, I say political, I mean like civil unrest over there, understandably, as people aren't able to, get fuel or food, and doesn't look like there's any solution to the crisis. Like, I don't know what happens from here. I guess the IMF steps in and says, we'll bail you out and give you another really big loan that you'll probably never be able to pay back, and we'll prop up your currency for a little bit longer.
Yeah, well, as from what I understand, that's actually part of a problem, that Sri Lanka can't get loans because it defaulted. So it ran out of foreign currency. Yeah. And COVID also had an impact on that, because tourism was a big part of the industry and part of the way how they got foreign currency. But they ran out of foreign currency, and because they defaulted, I'm not sure when, I think it was a few months back.
It was a couple of months back.
Yeah. So they can't get foreign loans. So actually, my wife's friend is Sri Lankan. Her mum just came back to Australia from Sri Lanka to visit my wife's friend. So she was saying, basically, people are students aren't going to school, not because of COVID, because they don't petrol, people can't get to school and things like that. It's the whole country had ground to a standstill. So students there are learning remotely because of that. It's just the whole country ground to a halt. Yeah, so it's very interesting.
Yeah, and it's a spiral, isn't it? Because if the country grinds to a halt, GDP stops, productivity just overall stops, which means your ability to ever get a loan or to pay off the existing debt that you have, which is probably increasing in interest because you're now seen as a bad debtor, that it just gets worse and worse. Yeah. And I imagine if, say, the IMF or the World Bank does step in to offer a loan, which I'm guessing they will at some point, there'll be a lot of strings attached to that, being able to have UN votes or austerity measures or, I don't know, trade restrictions or something, which is what happens generally in other countries. Yeah. But I don't think it looks good for Sri Lanka in terms of the long term. Even when the bailout comes, it'll just come with a lot of strings, as they usually do.
Right, that's exactly kind of... it reminds me, you mentioned the book you read, The Confessions of Economic Hitmen.
Yes, very, very similar to this sort of stuff. Yeah, absolutely, exactly. Come in to say hey, look, we can bail out you from all this debt, and we just want to build this really great airport that's going to be amazing for your GDP, but it's going to be denominated in our currency, so you need to buy our currency and strengthen it. And if you ever default on those debts, then we'll get some of your UN votes, or we'll take some of your raw materials and sell them back to you as produced goods. As Seyfedin calls it, the misery company, which is economic development in developing countries.
Right. But and I think this stuff, I think Sri Lanka is just an early example. I really believe that there will be much more situations like this in the world over the next 2 or 3 or 4 years.
Yeah, I agree.
Yeah, because obviously, the two key things, energy and food, are going up very fast. And for it's hitting us even in Australia, right? I went to fill up my car, it's just crazy to fill up a full car. My car has diesel, and it's just
same. It's $150 to fill it up now. I don't think I've ever paid over 100, but there you go.
Yeah, but in Australia, we've got a bit of dispensable income, a little, still people have it, but if you go to a developing country, a lot of these people, live kind of basically from, they don't have any, they have very little savings, and food and energy, it's basically, that's what most of their income goes to. They don't have any spare money to go on a holiday overseas like we do in Australia. So, most of our budget goes to food and energy. So in developing countries, if the food and energy goes up, suddenly it doesn't mean just a worse quality of life. It just means they could literally be going hungry. And I think that's going to mean a lot of political turbulence around the world.
Yeah, understandably. And I think you're right as well that this is just an example that's sort of like front running, not front running, but like is ahead of the pack. Basically, we're going to see this more and more. And it's pretty unprecedented as well, because we have, I would say record high inflation in most places, but now interest rates are going up when we have a record amount of debt. And even when you look at Australia, so most Australians in middle or lower income are, you're right, like a proportion of their salary, a very large proportion of their salary goes to food, energy, and then mortgage. And so food and energy are going up. And so to curb that, the central bank is putting interest rates up, which means your mortgage becomes more expensive too. And there's supply issues with the food and the fuel. It's not all just about there being too much money in the system. So essentially, it's quite likely that all of those prices are going to keep going up, like mortgage, food, and fuel. And so if that's already the majority percentage of people's salary, I mean, you get to a point where you're then overstretched and you just start going negative further and further. And I don't think like this isn't limited to nations and individuals, because we've got a couple of other news stories that we'll shift to now, which are more about institutions that are going through the same thing, where they're overstretched in terms of loans. You could say they're over leveraged, and now they need to pay some of that back, and are finding like they don't have enough money to do so. And there's not really a simple solution for it. Like really the solution is more bailouts. So I mean, we'll pivot from the Sri Lanka news, and I'll mention some of what I'm talking about here. So this is probably to do or related to the price dump with Bitcoin as well, I think. I mean, I think there's a lot of things. It's a complicated situation, but you've got companies like FTX, which is a cryptocurrency trading platform, bailing out an insolvent yield providing service called BlockFi. They also provide Bitcoin loans, and that's to the tune of something like $400 million, a credit facility. Around the same time, FTX is also trying to bail out Voyager, another cryptocurrency lending and yield providing platform. And that I've heard various different amounts, but that's to the tune of around 485 million. And it doesn't seem like that's actually helping very much, because Voyager, even though they've got that 485 million bailout, is now declaring bankruptcy. And there's lots of very strange things in this story that I don't think we're going to be able to cover in enough detail, but just to sort of float some of the ideas here. In Voyager's bankruptcy filings, FTX is one of the places that took a loan out from them for around 377 million. So just in case
so can you say that? So FTX.
So FTX has bailed out Voyager for 485 million. But when Voyager then has gone and declared bankruptcy, it turns out that Voyager had loaned FTX 377 million. That is not meant to happen, and so that's something that's now going to like trigger an investigation, because FTX is bailing out.
So Voyager went bankrupt anyway?
Yes, that's right. So like they give them essentially about $500 million. Voyager then still declares bankruptcy, and in Voyager's filings, they found that FTX actually owes Voyager around 377 million. So how do you owe 377 million and then give a $500 million line of credit? Aren't you essentially paying back your loan? But that wasn't what the line of credit was about. So it's all very, very strange in terms of how this is all working. Celsius, which I don't have a headline here, but it relates to all this stuff. A lot of people have heard about Celsius and the kind of price dumping, and it's very similar, a lending and yield providing platform. There's now been a lawsuit put against them to say that it's essentially just a Ponzi scheme. There's now evidence to say that Celsius, that's right. They've been paying old investors interest just with new investors funds. So not even trying to do like earn money and then pay the interest or the yield off of that money. They're actually just like paying it with new investors' money. So this is all, and of course these companies are all lending each other money. So like Celsius has loans from places like BlockFi and Voyager and vice versa, which means that if one of them has a lot of insolvency problems, the rest of them have a lot of insolvency problems too. And I guess just to sort of like hit a couple of the headlines here to make the plot a bit thicker. So FTX wants to bail out BlockFi. And with this sort of $400 million line of credit. Morgan Creek Digital is currently one of the BlockFi shareholders. And they want to instead bail out BlockFi, because if FTX bails out BlockFi, it actually wipes out all of BlockFi's shareholders, including Morgan Creek Digital. So these bailouts are not bailouts where it's like, we're going to save you and we're going to save all your shareholders and all your customers. This bailout is essentially saying, well, we're going to take ownership of at least some part of this, and you need to not then pay off your shareholders and your customers, because otherwise this bailout's not going to solve the problem.
FTX would take control.
Yes, yeah.
Okay.
And so now there's almost like a bit of what seems like a bidding war of now another company coming in to say, well, we want to bail them out instead because we're a majority shareholder. And if that other person, FTX, bails them out, we're going to lose out. So we want to come up with the money to bail you out instead.
So basically, tell me if I'm understanding this correctly. So you're saying that because, are you talking about Celsius in this case?
BlockFi.
BlockFi, yeah. So you're saying FTX and Morgan Creek wanna purchase them because then when the BlockFi goes bankrupt, the owner can choose which shareholders get paid out, and they can choose that they themselves get paid out, where other shareholders.
Yeah. Essentially along those lines. Except they're not even saying we want to buy it. They're saying we're going to bail it out. But there will be some level of stipulations in that to say, well, if we give you this loan, it's on the proviso that we're protected in some way, or our shares are protected, or this loan has to be paid back to us before you pay back other shareholders and customers. So it's not really them buying ownership, but they're bailing it out with a lot of rules attached to it. Having said that, FTX has offered to buy it as well. They said, we can give you a $400 million line of credit, or we can just buy the whole thing for $240 million. Yeah. And so, look, it's unclear exactly what's going to happen. And this is a very confusing situation that every couple of days there's a new headline that just seems more dodgy or more strange. I think it's just useful for people to know this is all happening around the same time as, I guess, literal nation states declare insolvency and bankruptcy. So this is fractional reserve banking, I would say, coming home to roost in both the sort of central bank, nation state level, as well as institutions. Yeah.
I mean, that makes a lot of sense, because when I had FTX giving a loan to buy out these companies,
why would they do that? Especially if these companies are failing. Why are you going to come up with like $1 billion to bail out a couple of lending platforms?
It's like out of the goodness of the heart. Like it just seems like. Like that makes more sense.
Some ulterior motives.
Yeah, it all looks very dodgy. I just hope. Yeah, like I hope always we don't want this stuff. Like let market economics play out, and that's the thing. At the end of the day, with Bitcoin, if you're holding your Bitcoin, like nobody's like playing games with it. Nobody's lending it out. Nobody's doing some kind of, lending and re-lending in fractional reserve. That's why you have to own your keys and own your Bitcoin.
That's it.
And if you own your keys and your Bitcoin, nobody can do these silly games.
It's a peace of mind thing, isn't it?
Yeah, but people do have money on exchange, and so I guess they're playing the silly games that we didn't like in the kind of old legacy financial system.
That's right. We're trying to people are trying to replicate it in Bitcoin. Hopefully, if people get burnt, they learn the lesson and take self-custody, because I think that's the way.
And just a very quick thing, kind of slightly tangential, but on FTX, I was recently talking to a trader, and he's not just, because right now in like crypto, there's a lot of traders who just like got into trading, but he's actually like a pretty experienced trader. He worked for like investment firms and traded like foreign currency, like in his job in Sydney and stuff. But he's involved in trading Bitcoin now, and so he's actually a serious trader, not some kind of a guy who's trading from his bedroom.
That's right.
Type of thing, like who just came along recently. But he was saying that. He actually tried trading on FTX, and I didn't quite understand it, but he said they were doing the same. According to him, we're doing something dodgy, where like he put a trade and was like a delay or something.
Yeah, I heard this about Robinhood, and I imagine most big exchanges are doing this, where they use, because they get to see all the orders, obviously. And then they front run the orders.
Basically, that's what he was saying.
And sometimes it's just for like fractions of a percent. But I mean, when you're doing that with millions of dollars of turnover every hour or every day or whatever it might be, it adds up to a significant portion. But essentially, they're front running their customers because they can see what their customers are about to trade.
Basically, that's more or less what he said. It's kind of his trades are somehow delayed and they're front run. And it's basically a dodgy scam. He did actually say that on Binance, it does seem to be legit, and like he trades on Binance, but that's like that was his comment on FTX, which shows that they have, it's a bit of a questionable company.
Definitely, yeah. All of this stuff, I think, has like shown a light on how kind of either corrupt or like easily exploited some of these things are, because some of these things could be legal to do if they're like, semantically defined in a certain way, but clearly not ethical, regardless of whether they're legal or not.
Yeah.
I guess as a final point about lending and yield platforms collapsing. So Celsius looked like they were going to declare bankruptcy. It doesn't look like that's the case anymore. So apparently they've paid down quite a bit of their loans. And so there was a lot of info floating about to say like they had a liquidation price of Bitcoin around like 22,000, and then it was down to like 16 and 15,000. Now apparently that's down to about 2,000 or 3,000 Bitcoin. So as long as the price doesn't get down to $2,000 or $3,000 per Bitcoin, Celsius will survive. Which is interesting because Goldman Sachs was kind of like circling to help others get about $2 billion worth of loans to be able to buy Celsius's assets. So not to bail them out, not to give them a line of credit, but to say, once you declare bankruptcy, we'll buy all your assets from you, which I guess is kind of the more free market, creative destruction type approach. But it looks like that might not happen. It looks like Celsius might kind of like claw themselves back from the grave.
We'll see.
So similar to this, to some degree, is India-based cryptocurrency exchange called Vold freezes withdrawals due to insolvency. So that might not seem like new news, but I just threw this one in there because it's such a large institution. So they have over 1 million customers and more than 1 billion under management. And so this is very similar to like BlockFi and Celsius and Voyager and what we've just talked about. But this is a very India-centric exchange. I think maybe their largest exchange or one of. So this is happening, all over the world. And again, fractional reserve banking kind of coming home to roost.
Keep your keys off it. Keep your Bitcoin off an exchange.
Absolutely. Now, some good institutional news. NYDIG, which is the New York Digital Investment Group, has announced an alliance with Deloitte, which is very, very large, accounting and procurement and kind of everything else firm. And their idea is that they want to provide global Bitcoin banking for everyone. And it's a pretty good kind of ethos, a pretty good value or goal to have. NYDIG's been, I think, quite instrumental in sort of pushing Bitcoin only and Bitcoin as harder money. So I think this is pretty cool, like two very big players, especially Deloitte, which is much larger, I would say, than NYDIG, pairing up for something related to Bitcoin.
Okay. Yeah, I mean, sounds interesting. I don't know the details, but I have to say, when I hear Bitcoin banking, like again, my thinking comes like, are they gonna be like, do they control your Bitcoin? Again, like
that's right. Ross Stevens, who's the founder of NYDIG, he's been on a few podcasts, and my understanding, he's very much a Bitcoiner in the sense of like he doesn't want third-party custodian risk related to Bitcoin. He doesn't want fractional reserve banking related to Bitcoin. But people can say one thing, and then when there's a lot of money on the table, can do something quite different. So we'll have to see. I agree with you. Take it with a grain of salt. So far, sounds like some nice news.
Yeah, sure. I mean, like it's all right. Like with us at Hardblock, sometimes if there's like an older customer who's not that familiar with Bitcoin technology, like having if you're trying to get into Bitcoin as a first step, if for the first few months you keep some Bitcoin on exchange, like that's okay. Like we try to encourage them to kind of move it off eventually, but if what they're doing is as a step before they move it to their own kind of storage, that might be okay.
Or even something like what Unchained Capital does, where it's like a multi-signature, where you control the majority of the keys, but they have some just in case you lose one, like something like that. I wouldn't be outraged against. I think it's better for people to control their own. But there are certain populations that might not be able to at the moment, at least.
So because I haven't heard of what's NYDIG. I haven't heard of that company.
So NYDIG, the New York Digital Investment Group. So Ross Stevens, they manage something like $10 billion worth of Bitcoin for customers. Okay. There was a sort of an iconic podcast with he and.
So it seems like more like a centralized control.
So it's for institutions mainly.
Sure.
They have global customers, so it's not. I think it's based in America, but they customers all over. But yeah, I had never heard of Ross Stevens before. And about maybe a year and a half ago, he did a podcast with Michael Saylor. And I thought like Michael Saylor's, the big guy in Bitcoin. He's got like 1.5 billion Bitcoin at that stage. But then Ross Stevens starts talking about his like $10 billion of Bitcoin that he manages. So, and Ross Stevens put out quite a large, every year, puts out like a report to his investors to say, this is our direction, this is what we want to do.
Yeah.
Last year, he put out that investor report. It was just all about Bitcoin and how like Bitcoin has sort of changed his worldview and how he believes like this is the future of money and civilization and everything else. Talks a bit about Bitcoin mining, humanitarian impacts, etc. So he's the head of NIDIG. So kind of cool to see how that shapes up.
That sounds good.
Sort of related, at least parallel news. So Citibank, which is a global bank managing around $27 trillion to over 200 million customers in around 160 countries, have hired a Swiss firm called Metaco to establish a digital asset custody platform, which I imagine is going to be something similar to, again, like an Unchained Capital type deal where they say we can custody your Bitcoin and your other digital assets, hopefully in some sort of like multi-sig escrow type setup. But I guess other big institutional news moving forward, especially Citibank, like a huge player.
Right. Yeah.
So moving on to some gold news, a lot of interesting stuff happening with this. So US and Britain have decided to ban gold imports from Russia. At the same time, India has raised its import duty or its import tax on gold from 7.5 to 12.5%. And they're doing that to protect their currency because they can see more and more people fleeing to gold. They are the second largest importer of gold in the world. But at the same time, you've got a country like Zimbabwe introducing gold coins as an inflation hedge because their currency is currently collapsing. So it's almost like you got the US and Britain banning gold imports from Russia, but not from other countries, of course. And you got India saying you can import gold, but it's going to cost you about twice as much in terms of taxes. And then, of course, you've got Zimbabwe saying we want people to be using gold more because otherwise, if you're using our current currency, it's not going to work well for you. So people are kind of fleeing to hard money. Or governments are seeing people are fleeing to hard money and then saying, no, we need to clamp down. We need to stop people like using the exit hatch because otherwise it's going to weaken our currency. Does that make sense?
Yeah. It's pretty interesting about Zimbabwe. So after all those years of inflation, economic troubles, it sounds like the government is moving to sound money. That'd be interesting if that's I don't know about the details of it. Maybe that's maybe there's more to it. Maybe it's misleading because you can only, it's hard to believe that a government who has mismanaged the currency for so long is now moving to sound money. But if they are, that's pretty cool.
Absolutely, yeah. We're going to see probably a variety of nations dealing with this in different ways, aren't we? Like, obviously, India saying we don't want people going to that. We're going to clamp down to strengthen our dollar. US and Britain, I imagine, are doing that for the same reason, but also trying to stop Russia being able to prop up their own currency with selling gold as a commodity. But yeah, I imagine there's going to be some nation states that say, why? Let's not repeat this again. Let's not just like reboot our currency. Let's actually like try to have this other currency instead. And then maybe we have a gold-backed currency or something like that. It's hard to see. So
maybe Zimbabwe in the future will be kind of a role model of good economic management in 10 years.
Perhaps we'll see.
There'll be like economic scholars from Zimbabwe coming to Australia to lecture us about
economics. Exactly. Hopefully,
how to manage an economy.
I think we need a silver lining.
Eating bugs and
exactly. Burning our plastic money for to keep warm. So a couple of other things in India, which I guess are sort of related to this. So some people will hear, India increasing the taxes on gold and be like, great, people will go to Bitcoin and crypto instead. Unfortunately, though, they have this very controversial crypto tax law, which came into effect just a couple of weeks ago. So what this is that every transaction, whether it's a capital gains tax event or not, must give 1% to the government. So if I send you one Bitcoin, the government gets 0.01 of that. Now, this can be then, what's the word? I guess sort of married up with your end of financial year tax. And if you've overpaid tax, then they'll give you some of this back. But essentially every transaction, even if it's not like buying and selling for trading, if it's just paying for something, the government now takes 1% of that, at least initially. And at the end of the year, they decide, do we owe you back some of that or not? So that to me is just trying to, I guess, clamp down on the use of cryptocurrency, especially Bitcoin, like as a currency itself. And my understanding is this is all being managed through centralized exchanges. So if people individually send peer-to-peer, it's an honor system. Like you have to give that to the government or disclose it. Good luck, exactly. But if you are doing it on an exchange, the exchange is the one that kind of like cleaves that 1% off and saves it for the government.
Yeah.
I think kind of related to this is that they've now changed their data privacy laws quite drastically. So data centers, virtual private server providers, and virtual private network providers in India are now required to keep logs for 5 years, which obviously, if you know much about those type of services, they're not services that you want to log your activity. But now they're saying essentially we're clamping down on gold tax, or we're increasing gold tax. We're clamping down on cryptocurrency, and we're going to start data logging everything that happens within this country for the next 5 years so we can perhaps police these things in retrospect.
Yeah. Actually, India's like kind of an interesting example. They seem to have, the government seems to have a very kind of socialist type mindset in terms of like trying to control people's money, and like everybody, you have, you're clamping down on gold and Bitcoin. Like they really want people to use the currency and not other stuff. But it's interesting because, with gold, for example, actually, Indians own quite a individual, like Indian citizens own quite a lot of gold. So despite all these efforts, actually Indians do own a lot of gold in India.
They're the second largest importer of gold in the world, which I had no idea until the story.
So despite the government's efforts, and Bitcoin, and that's kind of Bitcoin's kind of gold is kind of decentralized, but Bitcoin is also very decentralized. It's even easier in some ways to move and transfer and import
it.
Like importing gold, like it has to come physically. Importing Bitcoin into India is much easier.
Absolutely.
You don't need a ship or something to import Bitcoin. It's just electronically. So, like at the end of the day, I think if there is a demand, like even if the government tries to stop it, I think if there is a demand, I think it's going to be hard to stop people from owning Bitcoin.
Yeah, it's like an evolutionary thing that people will flee to something that is more efficient, that keeps them alive, and that's hard money. And there's a bit of a, what's the term, a Streisand effect, when the government says, don't buy Bitcoin, don't buy gold, keep our currency because it's collapsing. People are going to go, maybe I should buy Bitcoin and buy gold, even if I'm getting taxed more, even if you need to like circumvent this 1% tax rule or something, people are probably more willing to do that. Just because the government says don't do that. It's like it shines a light on it.
So I believe, so what's the actual law in India? Import duty. So I think at one point they actually banned owning gold like for individuals or personally or something like that.
I think that was a while back, but now you're allowed to bring it in, but it's just you get taxed quite heavily. It used to be about 7.5%. Now with this rule, it's around 12.5%.
Yeah, so it shows, because some people say like, what if the government bans Bitcoin? I think, and that kind of shows like in India, okay, well, the government banned gold, but people still own gold, and I know it can be done because it was kind of done in America. But mind you, in America, people still did, like, there were people who, when it was banned in like the 1920s, gold, people still did. There were people who held gold, like secretly. Not everybody turned their gold in. So, like with Bitcoin, I think it's like you can make it harder and you can make it kind of go underground, but it's going to be really hard for a government to stop people owning Bitcoin, especially in an economic collapse type situation.
That's it.
At that point, like the incentive is going to be so great, and I think the government would just be unable to police something like that.
That's it, especially when it relates to people's survival. They'll go to it regardless. Look, pretty much related news. The Bank of Japan now owns more than 50% of all Japanese government bonds, after starting, in quotations, temporary quantitative easing in 2001.
Okay.
So this, I mean, I don't know if it requires much comment. That is outrageous. A central bank owning a majority stake in essentially a government's bonds. And other countries are not far behind. So I thought America would be pretty close to that. America's at about 20, 25%. But when you look at like the UK, England, they're getting pretty close to this too. And given that this is a trajectory upwards, I imagine they'll be there just in a matter of time, essentially.
Yeah, I mean, the word Ponzi comes to mind.
Yeah, absolutely. Yeah, you need to keep pumping money into it. And if you don't, the whole thing collapses. So there's just incentive to keep pumping money into it until you own, I don't know, 100% of the government bonds. Outrageous.
Yeah.
In some US news, the SEC, Gary Gensler, who's the head of the SEC, he's labeled Bitcoin a commodity again. This is like the third time that he's done it in talking, while also alluding to other cryptocurrencies likely being non-complying securities, which is very much Michael Saylor's narrative now. Rather than calling it digital property, he's calling it a commodity, digital commodity.
Yeah.
Similar, well, not similar, but sort of related news. The SEC rejected Grayscale's spot Bitcoin ETF application again. So Grayscale is now suing the SEC, saying that it is having very arbitrary and capricious stance on Bitcoin spot ETFs. Basically, their stance doesn't make sense. Given that we have so many spot ETFs now throughout the world, the US is the only one without one, and they don't seem to be providing a good reason for it. So Grayscale has partnered up with a couple of other companies to more or less sue them. So some more institutional news. OpenNode has partnered with Lemon Cash, which is a Latin American fintech company, with the intention to bring the Lightning Network to over 100 million Argentinians, which pretty cool news. Sounds like, some places are sort of barreling ahead with Bitcoin. Some people are trying to like put the brakes on. I guess more sort of got this institutional or regulatory news. The Bitcoin Policy Institute, which puts out a lot of FUD-busting articles, has submitted a report to the US Department of Commerce on digital asset competitiveness, just to essentially explain what is Bitcoin, why it's about Bitcoin and not shitcoins, and the numerous positive humanitarian and environmental impacts Bitcoin can have as long as the US stops delaying things like, say, spot ETFs, regulatory clarity, even things like property rights, etc. So there's a lot of push, I guess, at the moment for institutions partnering with each other, as well as trying to kind of like partner with the government, partner with the state to, push Bitcoin forward. Now, sorry.
No, continue.
I think, look, there doesn't need to be too many comments on that. Like some of it's just some headlines for people to know, like there's a lot of places barreling ahead with Bitcoin, a lot of places trying to put the brakes onto Bitcoin, at least in the meantime. This bit of news I'd like to talk about is Peter Schiff's bank in Puerto Rico has been closed by regulators for allegedly not maintaining the net minimum capital requirements. So Peter Schiff said he was unaware of the requirements, had no prior communication, and he has since found a buyer for the bank that's willing to inject capital far in excess of the requirements, but the authorities are not allowing the sale and are essentially freezing his accounts. Peter Schiff has then said that he's personally impacted by it, but those accounts were also holding the majority of his customers' funds. So his customers are likely to lose money from this too. He believes that it's all a, what's the word? Kind of like an attack on him, saying that he's getting a lot of allegations that are not at all true. So Puerto Rican regulators think that he's involved in some sort of tax evasion, which is why they're not allowing him to sell the bank and why they're freezing everything. But he's saying none of that's true. And so this is an evolving story. We'll have to see where it goes. But the reason I've included it is because Peter Schiff, for a very long time, has obviously been a proponent for gold, but not for Bitcoin. And Bitcoiners have been trying to say there's third-party risk in banks, it's third-party risk in your own bank, and he hasn't believed that up until this point. And so I don't think this will change his mind about Bitcoin, not yet at least. But it's just interesting to see someone who's been such a large proponent now, I guess, get a bit of learning about what Bitcoin provides in terms of self-custody and no third-party risk.
Yeah, I mean, like I actually have some respect for Schiff, and obviously he was. I don't think he's the enemy. Like he doesn't like Bitcoin. That's okay.
That's fine. Yeah.
Like he does have like kind of a free market, live and let live attitude, which is fair enough. He prefers gold, whatever. I mean, that's his choice. He certainly criticized the kind of government, the bad decision making and incompetence of the government, which so we're on the same side with that.
I think he understands Bitcoin, but gold is his.
Yeah, that's his solution.
That's his,
our solution is Bitcoin. His solution is gold.
Yeah,
which is fair enough, but we still agree on the problem.
Yes, absolutely.
And whether his target, I mean, I don't know the details. Maybe he's being targeted. So I don't want to rejoice in his.
No, and that's why I say allegations, because nothing's been proven. Even though they say he's doing tax evasion, he's saying, I'm not doing any of that. This is what they told me, but then now it's all very incongruous because I can fix that problem. They're not letting me fix it. So I guess we'll just sort of see how it shapes up. But
who knows?
This is still a Bitcoin fixes this kind of scenario, I think.
Yeah.
So shifting to some Australian news, I'll throw out just a few headlines, and then maybe we'll focus a bit on one of the topics. So one is that btc.com.au, which I had never heard of before, which is an Australian cryptocurrency trading platform that's been around since 2018, is closing down as of the 22nd of July. And that's due to what they say is the cryptocurrency and stock market liquidation events, which means they were probably over leveraged as well. And luckily, they're not freezing withdrawals or user accounts. They're saying to people, you need to withdraw your funds by the 22nd of July, and you need to download all your end of financial year tax reports and so forth. So if anyone is using that platform, I would say heed that notice and warning and take your funds off the exchange and get whatever documentation you need, because they're now going out of business. Interestingly, they had expanded at about 5 times their initial rate last year in terms of like bringing on new staff members and so forth. So obviously, like that big run up, they over-invested or over, what's the word, kind of got loans and then now can't pay it back.
Yeah, I mean, obviously there's a bear market, and bear market, things go down a little bit.
Yeah, absolutely.
And there's quite a few digital currency exchanges in Australia, so it's much more competitive than it was a few years ago.
True.
So, these things happen.
That's right. And look, it's not all bad news for Bitcoin exchanges and lending platforms and everything else. So Volt, which is apparently Australia's first online-only bank, they've shut down now due to issues with raising new funds.
Okay.
That hasn't led to any accounts being frozen or people not getting their money, because that's insured by the government up to $250,000 per account. But just interesting to see a bank now shutting down in Australia as well. This is just some interesting news, not new news, but Jeremy and I stumbled across it the other week, where Digital X, which is the Digital Asset Fund, they're an ASX listed company, so Australian Stock Exchange. They actually hold 216 Bitcoin on their balance sheet. Again, not new news, but just interesting news. I didn't know that we had many institutions in Australia that hold Bitcoin on their balance sheet, especially like 216 Bitcoin. It's a decent chunk.
So when you say it's a digital asset fund, what does that mean?
They hold a bunch of digital assets, including Bitcoin, and people can buy into it more or less to get
digital asset mean other altcoins?
Other shitcoins, basically. They have some stable coins. They don't have a lot of other altcoins from what I can see. It's by majority Bitcoin and some stable coins. But essentially, I guess you can buy their company, and by proxy, you're getting some level of ownership of Bitcoin. But it's, of course, better to just own the Bitcoin.
Yeah, I mean, 216 doesn't, obviously, it'd be great if I had that, but it doesn't seem like...
It's not huge.
It's not like a huge for...
No, that's right. It was just interesting that there's an Australian company that's on the Australian Stock Exchange that owns Bitcoin, that put it on their balance sheet.
I'm sure there must be other companies which have owned Bitcoin.
I would say so, yeah. So the bit of Australian news, which I think it's good to dwell on just a little bit, is the RBA has raised the interest rates by 50 basis points. Now the interest rate is 1.35%. They intend to keep raising rates over the course of this year to try to curb inflation. They claim inflation will peak later in this year in 2022 and then return back to 2 to 3% in 2023.
Okay, yeah, sure. Okay, Can you remind me in 1 year? Okay. So
exactly.
Okay, yeah.
So
we'll see how that goes.
I don't know if much more.
It's transitory. It's transitory.
Yes,
it's transitory inflation.
Yeah, it's going to come back down basically.
Yeah, okay, sure. I was worried. Okay, cool.
Yeah, exactly. I feel much better now. Yeah. I don't know if this requires much comment. This goes back to what we were saying just before. We got sky high inflation, interest rates going up with sky high debt, which means everyone just needs to pay more, interest repayments, while at the same time needing to pay more for all the stuff that they need to live. I think they get to the end of this year and they need to reverse course, similar to what most central banks will do, like the Federal Reserve, for example. Yeah. And I think this 2 to 3% prediction of CPI by 2023 is complete rubbish, unless, of course, they remove most of the things from the CPI and say, hey, look, it hasn't gone up that much this month. So we'll wait and see.
So what's the CPI in Australia right now?
Something like 5.6% or 5.1%, but they're predicting that it'll go up to 6.7% by the end of this year.
Okay, sure. I mean, my wife was just telling me that she was buying like berries from the market, and reckons she's buying 50% more than she was buying last year. And she always tells me like all the food she's buying, and everything's like 20% more expensive than last year.
Well, yeah, CPI is the lowest possible figure they can get, isn't it? Whereas when you look at perishable goods with variable inputs, kind of goods that are used for storing value, they're all up something like 25 to 50%, which is crazy. So just to finish off, 2 technical news headlines. So Samsung announces a new 3 nanometer chip to be used in the next generation of Bitcoin miners, with the intention that it has better hash rate and decreased energy use, up to about 30% efficiency, basically, over the current 5 nanometer chips that are used in the most recent generation of Bitcoin miners. So this is pretty cool to see. Like Samsung's already been involved with chip development, of course, but the fact that they're still trying to kind of push that efficiency and something as much as a 30% efficiency gain as well. The other bit of technical news here, which is just really more of a summary, is the Bitcoin Optech newsletter, which I'll probably start referring to a bit more in the podcasts, because it summarizes a lot of recent discussions between Bitcoin developers about things like what do we do with the block subsidy, once the block subsidy ends, how do we kind of keep there's some sort of reward for miners going? What kind of alternatives do we have for things like reusable payment codes or BIP47, so like private transactions between 2 people? What other options are there for improving like scalability and privacy of the Lightning Network? So useful stuff to be for them to be talking and thinking about. And if you're keen to know more about those topics, I think check out that particular newsletter. Yeah,
definitely. Yeah, the Bitcoin Optech newsletter. It's great if anybody wants to keep up to date on the technical developments in Bitcoin and Lightning. It gives a summary of what's happening, and it's very well done.
Absolutely. It generally comes out every week or 2. So I'll start trying to keep more on top of what's going on with it, and just sort of throw it in there so you can check the show notes, and we'll give maybe a bit of the headlines each time. Otherwise, that's all the news that we had today. Only however many topics that was, 20 something. It's a lot of stuff going on, lots of inflation, lots of government sort of clamping down, lots of Bitcoin pushing ahead in terms of institutions adopting and partnering. So I don't know, good news, bad news.
I think it's always good news. Like if it's, like Bitcoin, this is good. This is good news.
It is.
Bitcoin is good news.
What's the flow chart? Is this good for Bitcoin? And there's an arrow going down that says yes.
Yes, exactly.
Global unrest. Currency is collapsing or hyperinflating.
Yes.
Absolutely is. Yeah. And there's nothing in here that scares me, to be honest. This is literally the thesis of Bitcoin is playing out now. Hopefully the rest of the world catches up and then decides to move to something like Bitcoin instead.
Cool.
Well, thanks, Daniel, for your time.
Yeah, thanks, Justin.
Thanks, everyone, for listening. If you enjoy the content, please share it around and subscribe if you haven't. And if you listen on a podcasting platform that allows you to leave reviews, then please do leave us a review. It does help us expand the podcast out to further audience. So thanks for listening, and until next time.